All right, traders, it is 7 June 2017. My name is still Jameson. Welcome to Behringer Trading. We are looking at a daily vertical bar chart of JetBlue Airways. The ticker is JBLU. Why do I like it? I like it because we see some distribution and prices broke down significantly or climatically. That kind of created a selling climax, and I like that it broke down in the 200-day simple moving average and found some support, some participation off this longer-term trend. And we can appreciate that the 200-day and the 50-day are now pointing up. So now we actually have a nice bullish uptrend. So that's nice. But what we have is we have a selling climax, automatic reaction, secondary test. There's our stopping action, right? So there's the end of phase A, phase B here. Now these are opportunities that people need to look for because prices have broke down. We're seeing a bear flag. Prices break down through that level. At this point, JetBlue could have just puked and broke down. It didn't, and it rallied away. And then we have higher lows that are present. This is a clue that it's in strong hands and buyers are present. When this happens and then we break out through a level of resistance and we back test and confirm this as support, you need to buy that. Whether it's this ticker or anything else, like that is the trade setup. So we have accumulation here on a smaller time frame, and now we have accumulation here in a larger time frame. So the price objectives that we have from a Wyckoff perspective are $27 and $31. Now, I thought from a Wyckoff or a market behavior standpoint, you can appreciate in this pullback, we still have a lot of supply that's present. That tells me that prices should come back into this zone, this price zone where the participation was, and confirm that it's in strong hands. And that does that by sending price discovery back in there and seeing if there's still sellers. And if there's no sellers, then prices should rally. So that's one entry, is that prices could break down, test the 50, even 21. If there's no sellers, prices rally. I feel like I need to bring this to traders' attention first, or the reason why it got my attention is that we have a bull flag that's present. I don't think this is an exhaustion gap. Bull flags typically have a failure rate of about 4 to 6%, so it's very bullish. And they actually continue the trend for about 50 to 70% of the length of the flagpole. So we can appreciate the base is at $21 and then 22, then 23. So this is a $2 move. So if it broke out of here, a $2 move, that's $25. So we have now a price target of, from a classical chart perspective, $25, and then a measured move through Wyckoff through a horizontal point and figure count of $27 and $31. I would advocate buying a breakout and then having a back test and adding to that position with the intent of trading in the $25, $27, and $31. If it breaks down and supply is weak, like you can appreciate here, in confidence, I'd advocate buying that with the intent that we retest highs or that we break out and achieve the $25, $27, $31 price targets. You can appreciate the oscillator is a little overbought. Because it's overbought, I think that prices would at least break back down and test the support that's being defined in the bull flag. The relative strength, actually a slight bearish divergence that's there, but we're still in a bullish position. From a relative strength standpoint, I do see some strength relative to the Vanguard Total Stock Market ETF. Compared to the actual its peers, it looks like it's actually underperforming its peers. But I'm comfortable with this positioning here. But it looks like the index itself is doing well relative to the actual market itself. So if money continues to go into the index, JetBlue's in a good position for traders looking for an outperformer to invest their money in. So I'm bullish this. If it breaks down, I'm still bullish. I would revisit and potentially change my mind if we lose $21. Otherwise, I like JetBlue.